Welcome. In this video, what happens if we buy 100,000 XCN today? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze the XCN.
Upon examining the chart, it is observed that the current price movement is facing an upward barrier. This level appears to be acting as a resistance zone in technical analysis. In the past, this area has stood out as a point where buyers weakened and sellers gained dominance around similar price levels. Therefore, surpassing this level could signal a new wave of confidence in the market. However, it's crucial that this level is not only tested, but also broken with strong volume. In many cases, when prices approach such resistance zones, selling pressure increases and prices retreat. For this reason, investors should consider not only whether the price moves above this resistance level, but also evaluate the volume and momentum indicators behind the move. Resistance zones often serve as psychological barriers as well. This is because many investors base their positions on these levels by utilizing technical analysis. As a result, breaking through these levels serves not only as a technical signal, but also as a psychological indication of market confidence. If the price breaks above this level, it is expected that new buyers may enter the market and price momentum may build. However, for this move to be sustainable, the price must hold above this area. Otherwise, merely testing the zone and falling back below it, leaving only a wick, can be considered a fake breakout and may lead to a significant correction in the market. If the price decisively breaks this resistance zone and starts closing above it, this is interpreted as a strong signal for trend continuation in technical analysis. In such scenarios, investors begin analyzing where the next resistance zone or target level might be. Moreover, after such a breakout, long positions become more secure while short-term bearish scenarios weaken. A successful breakout can also lead previous sellers at this level to re-enter as buyers, acting as a catalyst for further upward movement. At the same time, breaking this resistance zone could trigger the completion of common technical patterns such as double bottoms, inverse head and shoulders, or flag formations. Therefore, this breakout could activate bullish structures not only in the short term but also across larger time frames. However, for the price to break through and establish a new structure, overall market sentiment must also be favorable. Macroeconomic developments, sector-specific news, and general market perception play significant roles in the sustainability of this breakout. If the price fails to surpass this resistance and moves downward again, this zone could once again act as a strong resistance. This situation creates indecision among investors and may lead to a low-volume sideways movement. Additionally, repeated failed breakout attempts can gradually weaken buyer strength and increase selling pressure. In such cases, support levels should be closely monitored, and it should be analyzed whether the price is getting squeezed between specific ranges. The failure to break resistance may also be interpreted as a sign of weakness in market structure. It is crucial for investors to act within a strategic plan when evaluating such significant technical levels. For instance, gradually opening positions as the price approaches the resistance zone or waiting for a retest after the breakout to make a safer entry can help optimize risk management. Furthermore, setting stop-loss levels and calculating risk-reward ratios elevate these trades to a more professional level. This way, investors not only focus on technical levels, but also protect their capital and participate in the market with better timing. In conclusion, it is evident that this resistance level ahead of the price carries significant technical and psychological importance. If this level is broken, the upward move could gain strength and pave the way toward new targets. Conversely, failure to break the level could lead to continued consolidation or a downward correction. Therefore, the decisions and technical analyses made by investors at these levels will be highly influential. When chart structure, volume analysis, momentum indicators, and market sentiment are all considered together, it becomes clear that if this resistance is breached, the upward potential could further unfold. But we can't base the analysis solely on resistance. Let's now take a look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because Onyx Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
One of the most notable technical structures on the chart is that the price movements are progressing within an ascending channel formation. This type of formation indicates that the market structure is in an upward trend, forming higher lows and higher highs over time in an orderly manner. Ascending channels are quite important as they help investors better analyze the overall market trend. In this particular case, the price initiated an upward move after reacting from the lower band of the channel and is currently moving around the midline of the channel. This midline represents a dynamic area that can act as both support and resistance. If the price clearly breaks through this midline, the potential for it to move toward the upper band of the channel strengthens significantly. At the current position of the price, one of the key points investors should pay attention to is whether the price can break above the midline of this ascending channel. If the price can maintain stability above this level, it is expected that the market may gain momentum and begin a new rally toward the upper band of the channel. This upper band corresponds to the $0.57 level, which should be considered a significant resistance zone both as a technical target of the channel structure and due to its proximity to previous peak levels. However, for this target to be reached, the price must first decisively break through the midline, establish support above it, and then demonstrate upward breakouts with strong volume. Additionally, in ascending channel formations like this, the midline often acts as a key reference point that determines price direction. If the price breaks this band strongly and closes above it, it indicates increased buying pressure in the market and growing investor confidence. On the other hand, if the midline acts as strong resistance and the price struggles at this level, a temporary pullback toward the lower band of the channel may come into play. Therefore, it is crucial for investors to be cautious at these levels, to be alert for sudden price movements, and to closely monitor supporting indicators such as volume. Breaking the midline is not just a technical breakout, it also represents the overcoming of a psychological resistance level. Most investors interpret a breakout at this level as a sign of strengthening trend, which further increases buying pressure. As a result, the probability of reaching the upper band at $0.57 becomes stronger. However, before reaching this level, it is essential to observe whether the price can consistently stay above the midline. Looking at previous price movements, it has been observed that the price generally reacts significantly when touching the lower and upper bands of the channel. This confirms that the channel is active and valid. Specifically, the price reaching the midline from the lower band indicates strong buying momentum. If this momentum continues and the price breaks through and settles above the midline, the upward movement may accelerate. Reaching the upper band would be considered a significant success, both technically and psychologically for investors. If the price does reach the upper band, there are several points investors should be cautious about. First, this is a strong resistance zone and could be an area where profit-taking occurs. Also, how the price reacts at this level will be key in determining the market's overall direction. If the price encounters resistance and starts to decline, it could trigger a short-term correction within the channel. However, if the price breaks above this upper band and maintains its position, the market may enter a much stronger uptrend and new highs could be tested. In conclusion, the movements of the price within this ascending channel formation are quite healthy and technically meaningful. With a break above the midline, the target toward the upper band at the $0.57 level is clearly defined. Reaching this level would represent a major technical achievement. However, it is important for investors to closely monitor both technical indicators and volume movements during this process and to maintain solid risk management. The continuation of this uptrend heavily depends on the price remaining within the channel and especially holding above the midline. While the $0.57 target appears technically feasible, it must be continuously observed whether market conditions and investor sentiment are supporting this move. Factors such as overall market sentiment and fundamental news flow can also be decisive in this journey toward the target. Therefore, all investment decisions should always be made in alignment with your personal risk profile and strategy.
If we decide to purchase approximately 100,000 XCN tokens today, the total amount we would pay would be around $1,600. This calculation is based on current market prices, and of course, since prices can change within seconds, this estimate serves as an approximate average. In the world of investing, especially in the cryptocurrency markets, prices are highly volatile, so investors should always leave room for flexibility when making such calculations. Still, let's examine the potential return based on this example. Now, assuming we purchase these 100,000 XCN tokens at a price of approximately 0.0016 each, our total investment would amount to $1,600. To evaluate the potential return of this investment, we set our target price at 0.57. This target price is significantly higher than the current price, indicating that investors are expecting a long-term upward trend. Let's now look at the price difference. The gap between the current price of 0.0016 and the target of 0.57 means that the value of the investment could potentially increase by roughly 35 times. This means that 100,000 tokens would be worth approximately $57,000 if the target price is reached. In other words, a $1,600 investment could yield a return of $57,000, resulting in a net profit of over $45,000, roughly speaking. Of course, these calculations are based on theoretical gains. In real life, achieving such potential returns requires many factors to come together. First, there must be positive developments surrounding the XCN token and increased investor confidence in it. Second, there should be a generally favorable market sentiment and high risk appetite among investors. In addition, from a technical analysis perspective, the price must break through certain resistance levels, show upward moves with high volume, and maintain support above key levels. Investors may get carried away with excitement in scenarios promising high returns like this. However, it's important to remember that the higher the potential reward, the higher the risk. Therefore, when making such trades, investors must consider both their own risk profile and capital management strategies. For example, an individual should not invest more than 5% of their total capital in such a high-risk position. This is because there's always the possibility that the target price may never be reached, and losing a significant portion of capital could lead to serious financial difficulties. For XCN token to reach these levels, it's not only market conditions that matter, but also the strength of the project's fundamentals. For example, having a strong team, keeping up with current technological developments, offering a transparent and frequently updated roadmap are all elements that help build investor confidence. Additionally, partnerships, integrations, and community support also play a significant role in driving price upward. From a technical analysis perspective, breaking through previously established resistance levels where the price has struggled before supports the continuation of an uptrend. Likewise, increasing volume is a positive indicator for the sustainability of an upward move. However, even if the price reaches a certain level, investors may act emotionally and take profits early or face selling pressure due to sudden market changes before the target price is reached. Another important point investors should consider is market cycles. In the crypto market, bull and bear cycles can sometimes last a long time, and it may take months or even years for a token to reach its target levels. For this reason, investors need to be patient and avoid exiting a planned position prematurely as part of a long-term strategy. However, always operating with a clearly defined stop-loss strategy is crucial to limit losses. Lastly, investor psychology plays a major role in high-return potential trades like this. Not panicking in response to rapid price increases or drops, avoiding emotional decisions, and sticking to a preset investment plan are among the essential components of a successful investment journey. To summarize, today 100,000 XCN tokens can be purchased with an investment of $1,600, and if the price reaches the set target of $0.57, this investment could be worth approximately $57,000. This represents a very high potential profit. However, for this potential to be realized, both market conditions and the project's fundamentals must support the upward movement. Therefore, it's crucial to conduct thorough research, analyze the risks, and avoid emotional decisions before investing. Every investor should act according to their own risk appetite and capital structure and never invest their entire capital in a single position.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.